Welcome to TradeTheNBI.com. This is John's report is for the 13th, and well, the other day, continuation of the same. Again, we talked about this. There's just aren't any shorts. Fine, it's counter argument to what everyone thinks the market should be doing, which is retracing. It's like, no. So, that being said, we'll move on to the NASDAQ because I mean, it's just pretty straightforward. The interesting part of it, though, is that the move is literally kind of taking place counter to a lot of short activity because we had a little bit of a spike on, like you've been hearing, the NASDAQ, the DOC. As that began to fade out from the little bit of a pop, so that then what we're looking at is a generation of those having to move from resources that are missing. Kind of what I talked about, the funny moves into TLT. Like, oops, maybe we should have been in the market rather than in treasuries. And that was always the battle. And this is something I talked to you about too. As the yields increase for treasuries, the market would have to go up to correspond to it. Otherwise, you'd have an even greater mass exodus. So convenient, sure, but makes sense only to those that live in a dynamic economic model, because it does get sort of counter to the expectations of things. Because from the broader perspective, the way they view economics is outcome based, not about the economy, but just about what overall outcome they're looking for. In a broader sense, oil taking its big dive here down to the 67 range again, this is going to help. And I think that an interesting kind of perspective is that you can kind of gauge the health that they're seeing economic activity at by what oil does. And I think that, to say that the Fed, uses that as a barometer or creates the changing price, I couldn't argue anything like that. I'm just suggesting to you that it becomes interesting that we see that oil came down at a critical point that needed to in order to keep the economy from moving into recession, a significant one, and now stabilizing at a lower area just to kind of help things like limp along. Interesting. From a euro standpoint, nice pop earlier today, not for any particular value, just because it's getting a little bit at the bottom side of the range, so time to move back up. Gold, again, not going to do anything. Crypto's not going to do anything. I know you still hear people hyping it all right now. Oh, there's great things in the blockchain. Yeah, fine, okay, but that's not where money's flowing at this particular stage. So deal with it. And yes, I tried to experiment again with doing the 5K chart, and everything was good with the 50K, and as soon as I put the 5K, it just cycles back on and off and resets. So it's still a problem. Anyway, long and short of it, market's in pretty good shape, which is exactly getting close to the time where we should be thinking about that ending. So, a little bit of a positive extreme even developing today. A yellow candle from the previous day on the daily. I'm going to be watching that DOC and any spike back up of the white NBI, because that would be an indication that we're done. Also, the Azure and gold on the DOC sort of flattening out, which is interesting given what we're seeing from a shakeout, but not entirely uncommon. I mean, you can get these lulls in it where it breaks out and then it'll come up again. So just be watching for that. As always, though, trade well. We'll talk to you later.